We're heading for yet another big IPO. It's clearly the season, and this time all eyes will be on PolicyBazar. I've got Yashish and Alok both with me, the co-founders, and we've been waiting to hear from you and speak to you. I know, Yashish, you've been spending time in London as well. But as things near the IPO and the issue opening, there's so much anticipation and eagerness to hear really what some of the plans are. Now, if I take a look at the draft hearing as well, a couple of key things stand out. First of all, of course, we've seen that you have a very high cost when it comes to manpower and staff. And going forward, since you're also going to be looking at an offline model, want to just understand how the numbers are expected to stack up, what the broader strategic plan is here.
See, we have to understand what we are trying to do. We're trying to get consumers to buy insurance, health insurance, life insurance. These products are decisions which consumers take for a 30-year, 40-year time frame, very long time frames, sometimes lifetime. And so these are very important decisions, and they need a lot of hand-holding and conversations. And yes, because of that, manpower does need to be deployed. If you notice, there are also some productivity details that have been given out in the RHP, which kind of indicate that from productivity perspective, the manpower required for any given premium has been very steadily reducing. Now, coming to the offline strategy and the fear that might be an expansion of manpower, I think on a premium divided by manpower basis, it would definitely be an increase of premium by manpower. It will be more efficient than not compared to the existing business. There may be some, 1 quarter or so that you may see a little expansion, but very quickly. See, we are not putting offline manpower to go and scout for new business.
Right.
What we are doing is we're saying, let us use the offline presence to enhance conversion of our existing customers. So if a customer has come to me, a certain percentage will convert on the website, a certain percentage will convert using the call center, a certain percentage will require video calling, and a certain further percentage of conversion we may achieve if we are also able to visit the customer at home. So I guess it's, multiple channels are required to achieve the same conversion and a higher conversion. And I think India is a vast country and it's an evolving country.
Sure.
So while some customers will start evolving towards, being more digital, there is a vast plethora of customers who will still require this hand-holding for the next 5-7 years to come.
Interesting.
And thus our emphasis in investing behind that.
Okay. Interesting. Alok, share with us, the PB Fintech IPO when it opens up, the kind of interest that you're anticipating, the existing shareholders that are offloading, and I know a lot of this is already in the DRHP, but for some of our viewers who may not have necessarily looked through it in detail, just share with us really how much float there's going to be for retail investors who may be looking to be a part of this story.
Sure. So, see, the issue opens on 1st of November, which is Monday, and it closes on Wednesday, 3rd of November. The total issue size is roughly $770 million, out of which 500 million odd is the primary component, which will be received by the company.
Sure.
And another 260 to 70 million odd is the secondary component, which is the offer for sale. A bulk of it, 95% of it, is actually offered by SoftBank, who are selling about 20% of their total holding. The rest of the investors not selling, and there are some individuals, including us, who are selling a small part of our holdings. The objects of the issue are to increase awareness from customer perspective in terms of the product for both protection categories, including health and term, and to look at the offline expansion that we just discussed, to look at some international expansion opportunities, and to look at the investment/acquisition opportunities. So these are the basic details about the whole issue.
Okay. Yashish, also talk to us about the fact that, of course, profitability is a big question mark when it comes to several of these new tech issues, and it's been a case that all founders have been asked to prove. You're a veteran. I'd love to hear how you're allaying investor fears when it comes to the path to profitability, especially as over the last few years we've actually seen numbers. I know last year was, of course, a COVID hit. But going forward, how would you address some of those concerns?
Genuinely, I haven't heard too much of that concern from investors. I've attended about 150 meetings. I did not see anybody overly worked up about it. And I think the emphasis in most of the meetings was around growth. I think we have the ability to be profitable whenever we choose to. Right now, it's nowhere near our priority. That does not mean we would be wasteful. Kindly appreciate this is a company that has raised, maybe about $400 million, $350 million, something, and more than 200 and something million is still in the bank. It has built out 2 brands, and both PolicyBazar and PolicyBazar, with probably a total spend of $140 million. So I don't think. So I don't have to think. Like most of the investment conversations we've had, they actually believe this is a fairly frugal organization relative to market. Now that doesn't imply that we are being more frugal than we need to be. But yes, you will never find us wasteful, is what I would say. But as long as some investment can drive growth and genuine growth, we will certainly go for it. I don't see why we would not go for it. And short-term profitability is certainly not the guidance we've been provided. Kindly also appreciate, even after IPO, 90% of our investors continue to be the same, because our existing investors are just continuing, right? So nobody is really selling except for SoftBank, who's selling about 20% of their shareholding.
Right.
So a bulk of the investor group continues to be the same.
Okay. So if we look at strategically, we are not looking at 1 year or 2 years, right? We are looking at mid-term to short-term of 5, 10, 20 years. And what is most important, it's a very young industry from online perspective. It's very low penetration from online perspective. So you need to do what it takes to grow the industry, to grow the market share of online. And that requires investments into not only creating awareness, but also trying to do a better service for the customers, giving them that confidence that buying an insurance product online or the lending product online will give you a similar sort of experience, maybe similar to buying an air ticket or a mobile phone or something else. And that will take some investment and some focus. And we'd rather go for growth right now, which definitely moves industry into the right direction, and not focus on profitability overly. But having said that, on the core business, we are very, very comfortable in terms of our cost structures. There'll be some experiments which will require a little bit of investments when they are kicked off. But overall, we are at a very, very comfortable stage of contribution margin, which covers all our direct costs.
Sure, you'll appreciate, of course, that particularly for a retail investor and with so much frenzy around the new issues, it's just good to cover some of these points and get to know the management and understand their thinking. When it comes to driving the business going forward, and I notice that again you have a fairly high marketing cost, which is not unusual entirely in companies like yours, but anticipated that this will go up even further. Share with us the plans in terms of how you're planning to use the IPO proceeds. I know you said that these are conscious decisions on spending to grow the business, but just want to get a sense of how you're planning to really allocate some of those funds, whichever of you would like to
clarify before Alok gets into that. Just wanted to clarify that our marketing spend as a percentage of our revenue will definitely not be going up.
Okay.
If anything, it will be coming down year on year.
Okay.
But yes, Alok, please. So I think there may be some misunderstanding there. And I think you made a very interesting point. It's not just for our investors, but also for our own sake. We are also investors in the company. I think after the IPO, I will be the largest individual shareholder in the company. Alok will be the second largest. So we don't want to not make profits. We don't want to be wasteful. And we are not institutions. We are individuals. Both of us come from middle class backgrounds. None of us have anything besides this company. So we are quite certain we are not going to be wasteful, and we will grow the business in a prudent manner. That said, if prudence is in growth, then not doing it would be lack of prudence, right? Okay. And I think so. We will definitely stay that course, and I think we've demonstrated, right? If you look at the entire gamut of what's been happening in the internet over the last 7-8 years, you would struggle to find consumer internet companies which have been built up with $70 million a piece, up to the valuation that we have. Like, all said and done, we burned $140 million, and we have a valuation of $6 billion.
Yashish, I appreciate what you're saying. My intention is not to sort of corner you or criticize. My intention is more to just in fact inform the viewer, because yes, you're right, sometimes there are overarching perceptions about tech companies, and particularly with the current frenzy and the kind of valuations we're seeing in the market. Also given the plans that you have to now take the business offline as well, like you said, it's not necessarily to acquire the business, it's also to have a more holistic service for your customers. But there's curiosity as to, okay, how much is it going to take to really expand the business? The quantum of funds that are going to be used to drive that over the next few years, just how you're seeing things and what you factored in.
No, totally right, Tara. See, in terms of marketing, the amount that is mentioned in the DRHP, 1,500 crores, that includes, first of all, 3 years. Second, both the brands, PolicyBazar and Petrol, and online marketing and brand marketing all put together. So we have been spending in that ballpark per year anyways. And as the revenues continue to grow, as a percentage, that will continue to come down. It's come down over the last 3 years also, and I think that trend, as Yashish mentioned, will continue in terms of but absolute number may not change. Absolute number may actually, meet the inflation. But in terms of the percentage, it will definitely come down. This is a very strategic thing for us. Today we have a lot of customers who come to us without spending marketing money, and they come to us because we might have spent some money in the past. So if we are looking at medium to long term, we need to continue to sort of get that awareness and get that brand presence in front of the customers. Customers, this is a very different category. This is not an impulse category. You don't have any instant gratification. So customers can drop off very easily. So you want them to come for the right reasons. You want them to be engaged with us, and you want them to take the right decision and purchase that product. And that requires some sort of investment into that awareness or marketing spend. But as I said, as a percentage, you will definitely see that coming down, as we have seen over the last 3 years.
Okay, fair enough. So would it be fair, and just to sort of wind up on that, but would it be fair to say that a large part of the IPO proceeds would be used to build the offline part of the business and possibly further acquisitions? But would that be a fair summary?
So we have given 4 objects to the whole IPO. So marketing definitely is one part of it, where the whole awareness piece will continue. The additional thing that we have put it out there are 3. One is all of our stuff that we want to do on the physical presence. The second is international expansion, and third is any opportunity that we see for investment/acquisitions. Now, all 3 are very important pieces, and we have dabbled in all 3 in some form, and we are very confident that these are accretive to the overall value for the company. In terms of international, we have a small presence in Dubai, and early data is very, very encouraging. So we want to definitely continue to see where we can get that business to in next few years. From acquisition perspective, we are actually not looking at market share acquisition. We are more looking at capability acquisition in terms of any IP, in terms of any tech stack, in terms of teams, anything which is again additional and complementary to what we bring to the table today. So, these will continue to be the main objects of the money that we are raising.
All right. And Yashish, anything you'd like to leave us with in terms of how perhaps this is emotional for you as the founder of the company to bring it to this stage? It's really a new innings now for PB Fintech.
No, I think it's a good company. It's been built, very solidly. It's been built with the right values. We have a very deep management team, and quite honestly, it's a compliment to Alok and his team that I pretty much don't even know there's an IPO happening, except for the fact that I've been invited here to sit and kind of speak to you guys. But that's what you find a lot in PolicyBazar. A lot of areas, the teams are very strong and deep, and I think that is where the shareholders should take a lot of comfort. That this is an organization which is very professionally run, not dependent on one or two individuals. While those individuals are very much here, that's not us shying away from our responsibilities and our prerogatives and our passions. But the team is not one people; it's about 200-300 people,
right,
at least. And those 200-300 people are very dedicated and they kind of know what they are doing. So yeah, we feel good. I feel good to have created an organization and an organization culture like this. I feel honestly privileged and proud to have that.
Fantastic. Thank you both for your time. All the best for next week, and we look forward to perhaps meeting you in person once the action has calmed down a little bit.
Look forward.
Right.
Thank you very much.
Bye.
Bye.